Welcome to Accounting Essentials, Master the Basics in 10 Days. I'm Casey and welcome to Day 7, Analyzing Financial Statements, which this is one of my most favorite sections in the book. And if we're just meeting, make sure to grab your flashcards and your pen because you're gonna wanna take notes. I also request that you keep your phone handy. Analyzing financial statements. Financial statements provide valuable insights into the financial performance and position of a company. At Ulta, these statements help stakeholders, including the owner and potential investors, assess the makeup company's overall financial well-being. So you're like, Casey, English please, I'm a new baby accountant. Okay. In the other sections, we went over how to prepare the financial statements. So what we're doing today is, since the statements are done, we're going to look at account line items and look at the change over time and comparing, for example, assets in Q1 to assets in Q4. We'll be able to analyze these accounts to see if they've increased or decreased. So what are financial statements? To recap, financial statements are reports that provide information about a company's financial performance. Think of it as a company's scorecard. So it's time to whip out that phone, open up Google and type in Ulta Beauty 10K, click on the 10K, and note it doesn't matter what year you select. Table of contents, financial statements and supplementary data, income statement. And just in case that you're just joining us, I'm gonna go over what the income statement is. So what is the income statement? The profit and loss statement shows a company's profitability or loss over a specific period in time. And don't just think income statement, because I'm telling you, many companies have a net operating loss. So take a look at Ulta Beauty's income statement and zoom in to net sales for the year ended at January 2023 compared to January 2022. As you can see, net sales increased, cost of sales also increased, but overall gross profit increased. So, baby accountant, what does that mean? Does that mean the company is doing better or worse than last year? So these are the kind of questions you need to ask yourself when you are analyzing financial statements, because I'm telling you, once you start preparing your financial statements at your accounting job, your accounting manager is going to ask you about the change. And it's your job as the accountant to catch mistakes. And you're like, what do you mean catch mistakes? Yeah, that means that if sales look unusually high, you may need to go back to another department and make sure that they booked their accounting entries correctly. Because believe it or not, people within Fortune 500 companies make mistakes all the time. That's why the accountant checks, reviews. Moving down Ulta Beauty's income statement, you'll see things like selling, general and admin expenses, impairment, restructuring and other costs, pre-opening expenses, operating income, and moving all the way down to net income. So if you haven't gotten your flashcard and your pen out already, I want you to make a flashcard over the income statement. So Ulta uses its income statement to report its profitability or loss. This statement summarizes revenue earned and expenses incurred during a specific period, such as a year or quarter. And pause just for a moment, meaning you might look at income for January, February, March, aka a quarter. You might look at income for the entire year, meaning all 12 months. So that is very important when you're analyzing your financial statements. Are you reviewing on a quarter to quarter basis? Meaning, are you comparing Q3 compared to Q2? Or are you analyzing current year information compared to a total prior year? And you might be like, well, Casey, how do I find this? What do I do? Always read the header section of your financial statements. If it will say for the quarter or for the year ended. And if you don't have revenue mastered, flashcard time, what is revenue? The income generated from makeup sales at Ulta. When you're reviewing the changes in the income statement and you look at net sales, for example, we can only see net sales. We are not privy to product line information changes. And you're like, what do you mean product line? Okay, so if you walk into an Ulta store, they sell several different types of products and we're only seeing net sales. We are not seeing if Kylie Jenner Cosmetics lip kits are flying off the shelves and if Huda Beauty eyeshadow palettes have lost money for years and years. Nope, we're only seeing net sales. But you need to ask yourself as the accountant, okay, if net sales look high or low, what within the company is selling well and not selling well. And this is the kind of information you're going to provide your accounting manager in regard to your variance explanation. Expenses, costs incurred in operating the business, including manufacturing, marketing, and rent. Analyzing the income statement helps the company and its stakeholders understand whether Ulta is making a profit or incurring a loss. So this is really important for you as the accountant. As you march down to the expense statement of Ulta's income statement, you're going to look at selling, general, impairment, and pre-operating expenses, and you're going to figure out what expenses look high for the quarter, maybe what expenses look low. And you might say, well, why would I care if an expense look low? Because if something was not booked, if somebody forgot to completely book overhead expense for an entire office, you're going to want to catch that because you don't want to risk understating expenses and having to overstate in the next quarter. So once again, it's always your job as the accountant to review. Now that we've learned how to analyze the income statement, let's take a look at Ulta's balance sheet. Now repeat the same process if you haven't done it already.
Google Ulta Beauty 10K, click on the 10K, table of contents, financial statements, and supplementary data.
Bring up that consolidated balance sheet. The balance sheet is made up of three main sections: assets, liabilities, and equity. Put this in your brain. If you do not remember it, go over it all the time. Have a balance. If you're studying, tape a balance sheet on your binder, tape it on your wall. Look at what accounts go in the assets, liabilities, and equity section, because you need to know this forward and backwards, up and down, and all around. So what are assets? Ulta's makeup inventory, cash on hand, and investments. And let's take a look and drill into Ulta's assets section of their balance sheet. So Ulta has things like current assets, cash and cash equivalents, receivables, merchandise inventories, prepaid expenses and other current assets, prepaid income taxes. They total up current assets, property, plant, and equipment, operating lease assets, goodwill, other intangible assets, deferred compensation plan assets, other long-term assets, and total assets. And when you're analyzing financial statements, you're going to look from beginning to end and look for your changes. Like you would see cash and cash equivalents went up, meaning Ulta got more cash. Receivables went down, which means Ulta offers a credit card, and let's say you purchased $200 worth of lipstick with the Ulta credit card, that means their receivables go up. But once you pay off your lipstick balance, their receivables go down. So it would make sense if receivables are going down and cash is going up because they have collected cash on that transaction. Moving down to the liability section, but first, what are liabilities? Any loans taken for expansion and accounts payable for makeup and supplies, aka anything the company owes. They are liable. They are on the hook for it. Remember, there's no such thing as a free meal. Liability. So what kind of liabilities does Ulta have? Accounts payable, accrued liabilities, deferred revenue, current operating lease liabilities, accrued income taxes. So accounts payable, maybe Ulta bought on account from Kylie Cosmetics $250 million worth of lipstick kits, and they're going to have to pay Kylie Cosmetics back at a later time. And you might ask the question of, why would a company do that? Why wouldn't they just take their cash out of their cash account and not owe a company anything? Well, they might be reinvesting in expansion, so they get a better return on their investment if they pay for it at a later time. And remember, it's your job as the accountant to go by line item and analyze the change. Did it go up? Did it go down, and why? Why could have that happened? And that'll really make you get familiar with the income statement and balance sheet. The equity section of the balance sheet. So what is equity? Equity reflects the owner's stake in the company, including the initial investment and accumulated profits, aka the shareholder. Who do the companies care about? Not you, the shareholder. But that's a good thing. Without shareholders, we wouldn't have the companies. Remember, the shareholders are the ones holding all the risks. So some examples in the stockholders' equity section of Ulta's balance sheet include common stock, treasury stock at cost, additional paid-in capital, retained earnings, and total stockholders' equity. I challenge you to look at every line item on the income statement and balance sheet come closer and write a little, definition of what each account is. Because once again, the more you familiarize yourself with the accounts and where they go, the better you're going to be. And remember, the more you know about accounting, the more you're going to get paid. You've made it to the knowledge check. What is the primary purpose of the income statement at Ulta? A, to provide a snapshot of financial position. B, to show the profitability or loss over a specific period. Or C, to calculate financial ratios. The answer is B, to show profitability loss over a specific period in time. To recap, a specific period in time is at the quarter or for the year. Include things like at the quarter or in the year, or for the year. So what does the balance sheet at Ulta reveal? Profit and loss over time, financial performance over a specific period of time, or the financial position at a specific point in time. Yes, it is C, financial position at a specific point in time. Now listen up. This is a crap ton of information that we went over today, and I realize that I gave you an extremely high level of how to analyze the income statement and balance sheet. And I just encourage you, keep looking at it. The more you look at it, the more you will be comfortable preparing these, reviewing these, and analyzing these. And I highly encourage you, if you are studying accounting, get an accounting internship and get some real world experience, because I am telling you, I learned more at my very first accounting job within the first 6 months than my entire accounting education. And I got a BS in accounting and a master's degree. So it will be to your benefit to get an accounting job, but you're making some good moves by joining me in these lessons. If you haven't picked up Accounting Essentials, Master the Basics in 10 Days, it's linked below.